Alright traders, I'm just going to go ahead and shut down some some noise here. Just give me 1 second. Alright, there we go. Alright, good. Well, good day and good morning. Hopefully everyone has got their cup of coffee ready to rock and roll this morning as we go ahead and take a look at the market setups. Now, just keep I've got everything going at the same time right here. So we're going to go ahead and take a look at some details regarding some trading opportunities. Yesterday we spoke about a setup that we're looking for unhit targets to be hit. Now I just want to give everyone a quick heads up. What we're doing is we're trading pivot points and we're looking for targets, we're calling them targets, but we're looking for targets that have not been hit for this current week. Now I've actually done some back testing based on last year's data. And it's pretty interesting because our daily targets seem to be a lot better than our weekly based on last year. So I'm going to go through the data. I'm actually doing some backtesting on the monthly system as well to see how the monthly system performed as well, because it looks like we may even have a better opportunity to be able to use monthly targets as well as a trading strategy. So with that being said, traders, it's a very casual session, so as you can see, a very casual session. But we're going to go ahead and take a look at the details and see exactly what's going on with the marketplace right here. So let me go ahead and see what we've got going here. I'm going to flip it over to my screen, and let's take a look at the first currency pair that we've got set up right here, which is going to be, let's take a look here. Now, I believe I do have the chat activated. I don't see it lined up here, but the should be chat is disabled for the stream. Oh, okay. All right, so it looks like the chat may be disabled for this stream. I will make sure that next time that we have the chat actually available, so we can go ahead and I can take a look at any questions that come up. For right now, I'm not going to go ahead and get the chat activated. We're going to leave it off for right now, but we will get it activated from tomorrow onwards, so that any questions that do come up, that we can go ahead and address those questions as well. All right, so let's go ahead and take a look and see what happened the last time we spoke, which is yesterday, and see what the markets have done. And well, here is the setup right here. I'm going to go ahead and review. These are the trades that have been picked up since yesterday. We got picked up on the Euro Aussie dollar, picked up on the Aussie Canadian, and Aussie US dollar. Now I'm going to go to each one of those pairs and review them and take a look and see what's going on. Clearly, if we did pick up some sells, that means we have unhit targets that the market's now trying to move towards. So let's go take a look at our document here that we have got set up right here. So Euro Aussie, this is the one that we got picked up right here. So we're actually in a oversold condition, which means that we are buying. Is that right? Let me double check on that. And Euro Aussie is actually selling. Oh, I'm gonna have to go ahead and take a look at that. So we're selling, we're not buying. Let me take a look at the may have that wrong. So Euro Aussie here at the top. What I say we're selling, so it was a bearish alert right here, and we're overbought. Let me go to the charts, take a look at the charts right here, and I'm going to flip it over to the Euro Aussie. And this is what the daily time frame looks like right here. I'm going to go ahead and address the daily time frame. I don't look at the daily too much when I'm trading these targets. The only time I really pay attention to them is if we have multiple levels that the market has gone ahead and tested, or at least entered into, and then I may go ahead and take a look at it. But if I look over here on the Euro Aussie right here, we've seen quite a bit of weakness out in the Aussie cross over the last 24 hours. And that's because if you actually read up on the news, Iran's actually threatening to take on Israel because of what's going on right now with the US in Iran. So, Iran, sorry, my bad. Very early morning. So we're going to go ahead and take a look and see, is the position that we're in currently right now, is it going to extend further? Because we did pick up, like I said, we picked up a sell, so which means that we could probably see price moving up a little bit higher because of this range we're in. We could see price moving up a little higher, maybe another 100 pips. And based on my strategy right here, I'm looking at an ATR of about 92 pips, which means that I may be picking up maybe another entry point on this trade. So I've picked up one. I may pick up a second one on this one right here before we hit this resistance level, and then price starts working its way back down south. So we're still stuck inside this range, and if we are still in the range, well then traders, we should still then anticipate price to stay in the range until we see the breakout. Now, I'm going to go ahead and take a look at another thing right here. And I'm going to go to the 1 hour chart right here. This is the current target that we're actually chasing after. Remember, traders, we're calling these pivot points targets. So we've got a nickname for it. We call them targets right here. So I'm chasing after this target down here. Now, I am using a automated trading system. I do not have this available in the description yet, but I will have the automation available in the script below that you can get access to if you choose to. But at the moment right now, I am using the weekly EA, which is the expert advisor, to be able to help me to execute these trades. Now, I've already gone and sold one trade already, or the system has gone and deployed one trade already. I'm using the system to be able to help me get into trades, but I'm going to go ahead and manage my positions out. Now, I want you to stay tuned because we're definitely going to review money management around trading these targets, because the one big thing that traders don't understand is how to manage their positions inside these trades. And I'll be honest with you, if you go through any sort of trading strategy, all right, and maybe I should give you a little bit of a hint of what I'm referring to, but if you go through different types of trading strategies and you actually do some back testing throughout the years, the one thing that's really come up and been really, really good is counter trading strategies. And the reason why counter trading strategies are very good but need to be managed properly with equity management is because 90% of traders are losing. Let's just face the fact, right? 90% of traders, retail traders, lose. And the reason why retail traders lose is because they're always behind the 8 ball. They're always trailing the market. They're getting in on the late entries where the banks are controlling the movement of the market, right? The banks are controlling the directional bias. And so what happens is banks are moving the market in a direction in order for them to get better fills. What I mean by that is if they're pushing price lower, they're looking to get in at lower and cheaper rates so that they can benefit from the rally going back up again. So anytime you see a big move to the downside, it doesn't necessarily mean that's where the market's going to go. That just means the banks are pushing the market down and also creating a false sense of directional bias for retail traders that they think that, okay, market's selling off, I've got to go ahead and start selling. Now, the only time the retail traders get into that trade is when the trend is already on its way, or at least when they think the trend's on its way. Then they start getting in on the trade, and then the market moves against them, and think, okay, well, this is just a correction. But what it really is bigger banks manipulating the market or manipulating price for you to think price is moving down, but all they're doing is starting to get into positions lower and taking on low positions. So when you start losing on that trade, or retail, not you in particular, but when a retail trader starts losing and closing out their position, that's when they start taking profit as the market's going up again. Now, if I have to give you a quick sum up of exactly what that looks like, check this out. It looks something like this, all right? And I'm going to be doing a video on this on my YouTube channel very soon, and it's helping the traders understand exactly what the price is really doing. So what happens is we have 3 phases in the market. There's 3 phases in the market. Market moves sideways. We call it the consolidated or the contraction phase, right? Market moves sideways. Then we have what we call expansionary phase. Expansionary phase is when price goes up, down, and then starts taking off on a trend. So we have expansionary phase, and then we have trending phase. So there's 3 phases. we have contraction, then we have expansion, and then we have trending. All right, so those are three phases. Now, if you understand what banks are doing, all right, how banks manipulate the market is they manipulate the market in the expansion phase. So what happens is we have contraction, everyone sees markets moving sideways, and by the way, market moves sideways 70% of the time. Only trends 30% of the time. And of that 30%, we have the expansion phase, which is another part of about 15% of that. So we look maybe even 20% of that. So we're looking at about 10% of the time the market's actually trending. So when we use these targets, when we trade these targets, we're trading actually against the trend. So what we need to do is you need to understand what the overall directional bias is to understand exactly how long we should stay in our positions and when we should start looking to be able to exit our positions. So, there's an old saying, what does it take, or at least how do you eat an elephant, right? Not that anyone's going to eat an elephant literally, but how do you eat an elephant? And it's piece by piece. And how you trade this market is piece by piece. There is no home runs, all right? If you're trying to get a home run in Forex trading, you're in trouble, all right? You've got to take it piece by piece. And that's what we're doing here, trading these targets. We're trading it and making money piece by piece. So in any case, coming back to this three phases of the market, what we're looking for is which phase of the market are we in. Now, target trading works extremely well during the contraction phase as well as the expansion phase. What target trading doesn't do very well at is when we have very aggressive runs in the market, right? Aggressive trends in the market. But if we get back into consolidation, which the market will do, we can make money back up again. All right, now this is the deal you need to understand right here. Check it out. So, and hopefully that's cleared up a little bit of some sort of confusion that maybe some traders may have. Now, the one thing that you have to understand as well is if I go ahead and take a look at, let's go to, let me see here. Let me move this up, and I want to go to this right here. And there was a thought. This is what happens when you get to coffee very early in the morning. You lose train of thought, and I just lost my train of thought right now. But okay, so the thing is this: we were discussing the different phases of the market, and my point coming across was, oh my gosh, can you believe it? I actually can't remember. I did have a point, by the way. Hold on, I need another cup of coffee. Maybe another cup of coffee. Maybe that should do the trick. All right, let me think. Okay, so my point was, interesting. What was my point? All right, we're going to carry on. Now let's go ahead and carry on. All right, so we're going to go ahead and take a look and see what's going on right here. So, so this is where the market's price data right here. Oh, yeah. There we go. I got it. See, sometimes it takes a little bit of thinking, but once I get it, I'm back on track again. All right, so let's go back and take a look right here. So this is what I'm looking for right now. I'm looking to see what system is going to be working the best for me. All right. So when I go ahead and take a look at the actual breakdown, I actually broke down the system. This is the results that I've been seeing over the last year. Now, the reason why I took 2019, because traders, you got to understand when you're doing back testing, you want to be able to track how well the market's been doing over a period of time. All right. So I'm going to go ahead and break this down to 85. And so if I look over here, maybe it's just too small for some of you to read, but let me go ahead and read out what's going on right here. Now, what's attractive with what I'm seeing right here is I like the amount. Look at the pips that we've generated. Now, this is full automation, right? This is no interruption to with human intervention, right? We've got no human intervention on this. This is fully 100% automated, right? But I've always said to traders that we should never place a system on full automation without some sort of hybrid trading approach, which means that we've got to have some sort of human intervention. And the reason for that is because even though these targets are so great and so popular and strike so well, we have to realize that these targets also have a 3% of the time that it does not get to these targets. So you don't want to be in this big long trade for so long and the market never gets to that trade based on that 3% rule, right? There's a 3% chance that we may not even get to these targets. So they've got a 97 over a period of time. they have a 97% chance of getting to its target. But if there's a 3% chance that we're not going to get there, we have to make sure that we are ready for that. Now, the reason why I'm going through this process right now and discussing all of this up front with you is because as we go through these different sessions every day, I need you in the back of your head to start knowing and understanding and realizing that, hey, listen here, there's always that chance that there's that 3% chance that we may not hit our target. So when we look at when we look to intervene in a trade, it's because we're anticipating that price is not going to get to that point. Now, how would that happen? I'm going to explain that in a moment, right? But let's take a look at the data right here, and if you look at the data, we're seeing on the data right here that we have price. Oh, these not price. We have a lot of pivots being generated based on daily targets. So these daily pivots, weekly pivots, and the monthly pivots. I'm actually doing backtesting today. I've got Cameron doing that for me to get the data on that. But I'm looking over here, and by the way, if you don't know who Cameron is, he's actually my son. But he is getting the backtesting done for me on the monthlies. But if you look at the daily and the weekly so far with the backtesting we've done on the 28 currency pairs, we've generated 68,000 pips over the year of 2019. That's last year. Look at the weeklies. The weeklies we generated 72,000 pips. Now the one thing that I don't like about this. Now remember, traders, we had a lot of news that came out last year. We had the impeachment, right? The Trump impeachment. We had trade wars, and that trade war is not done yet. You can see China is still battling back and forth with the U.S. right now, trying to get a trade agreement done, or these China and U.S. So trade agreement is not really done yet. But we had huge movements in trade agreements last year when Trump decided that's it, he's putting the line in the sand. We had Brexit out last year. And all of this, in fact, all of this happened from around about July to October. All of that really filtered out at that time. And that created quite a bit of movement in a lot of these pairs. Now, if you take a look at these pairs right here and take a look at the data, you'll see that we've got, for instance, like one particular one here of the weeklies. We've got a 6% drawdown right here. Now, we made 6% overall, but it was a 6% drawdown. Now, if you're trading with multiple currency pairs, 6% drawdown is pretty heavy. I mean, look at the Euro JPY. That was heavy, heavy, heavy. 8% drawdown. That's not something you want to get yourself caught up in, right? Now, I want to remind everyone that I used a 0.25% risk on each trade. So there's a risk. You do have the chance to be able to set your risk percentages. But if you have a large trading account, right, and you actually traded not percentages and you actually traded micro lots, you would actually make for the year, you would have made around about $72,000 trading with a let's say one mini lot, not micro lot, but one mini lot. You would have made $72,000 because mini lots is $1 per pip. So you would make $72,000. And if you traded percentages, you would have made a 59% return on your investment. But the reality is this, traders, and this is I'm not trying to paint a pretty picture here. I want to be real with you. And the reality on this is that we cannot trade 28 currency pairs. We do not have the equity to trade 28 currency pairs unless you drop the risk down. Now, taking an 8% drawdown on one currency pair is certainly going to put you into trouble if you have other currency pairs, and there were drawdowns in other currency pairs. Look, at the end of the day, it made money. But the question here is the drawdowns were too high in order for you to be able to sustain the drawdowns with the multiple currency pairs. So what you have to do is you have to reduce your risk. All right, we said earlier on, we take each trade piece by piece, right? How do you eat an elephant? Piece by piece. The same thing here in trading. Instead of looking for these big runs and making these big profits, if you reduce your risk, all right, take 8% and say, if I reduce that to a 2% drawdown, that means I have to gear it down 4 times. Whatever my risk was, I'm going to gear it down 4 times, bringing me down to a 2% risk, okay, on that drawdown. That means I'm going to be making 4 times less on what I currently have made, but I'm not going to run into problems with equity issues. I'm not going to run into margin issues. I'm going to be able to trade 28 currency pairs if I can, all right? So I can trade a lot more currency pairs by reducing the risk down to its bare minimum. Now, check this out. The daily targets actually, to me, were a lot more interesting. Now, you could take this data and you could say to this data, well, based on this data, I'm going to take the currency pairs that perform the best and only focusing on them. Because, and the reason why I put the ATR in here on this left-hand side, because I want to do a comparison and see if it was better to have traded pairs that have a higher ATR and stay away from the lower ATRs. Because if you have lower ATRs, it means based on our strategy, you'd be entering more times. And if you have a higher ATR, you'll be entering less times. So I'm waiting for the data to come back on the monthlies. And when I get that data, I can do a very good comparison between the different targets and actually go ahead and start separating my accounts and deciding how I want to trade each and every one of these targets. So I can trade all three of these, weekly, daily, and monthly, but trade it with a different approach based on equity management. So the good thing here is, traders, that the system and the trading strategy that we're showing and teaching has a very high success rate. It's a very good trading strategy. The only thing that a lot of traders really struggle with that we're going to help and fix is how to be able to manage the position, all right, based on good equity management, all right? So let's go ahead and take a look here at some setups right here. So we've got, we're going to go ahead and update. We've got the, we said that we've got the, there you can see, we've got the Euro Aussie, all right? We've got that short. And then we've got two other Aussie crosses. We've got the Aussie US dollar, and we've got the Aussie Canadian, and they are both buys. All right, so let's go back here and take a look at Aussie CAD and then Aussie US dollar. So there it is there. We had a nice little bearish move down. We've gone ahead and bought in based on the RSI moving to an overbought condition. We're buying long towards that target right here. There's the target set up right here. I'm going to go ahead and mark that off. So we're chasing after that target right here. Now, what I'm going to do is I'm going to go ahead and just change the document over here because this one right here is actually now a oversold condition. So we're buying. And this one was also an oversold condition, and we buy it. So this one is actually active right now. These ones are right here, active. And down in the description, you'll be able to get to this document. I made this document available to you. So if you go down in the description of this video, you'll be able to get to the details. And this one is also active, so I'm going to put this one active as well. So we're active on this. I don't believe we are active. No, we're not active on this one. I don't know why I put pin in there. Oh, I see. That is pinning. It's not active. Okay, so we're active on three of them. I'm going to go ahead and take a look at the Euro New Zealand dollar to see if that one is active, or at least setting up, or if it hits its target. Go ahead and take a look and see if it hits its target. And no, you see the RSI is not in overbought condition yet, so we haven't quite got an entry point here. Here is the target that we're looking for right here. And price has not got us into a trade yet on this one because RSI has not moved into the overbought. So we're still active, or at least penning on that one there. Sorry, let me pull this over. And then we're looking at another one right here, Aussie JPY. Let's take a look at that one. That one is also penning for this week. And there is the target there, still penning for this week as well. No trades have been activated on that yet. And then the other one is, let's see here, New Zealand CAD. Let's go take a look at New Zealand CAD. And New Zealand CAD. Nope, definitely not. There is a target right here. We still have not hit this target right over here. And we're looking for price to move into an oversold condition right here, which has not happened. We'll start buying at that point, looking for price to go ahead and move back up again. Right now, this could be the expansionary phase that we're going through. So that means that we're looking for price to drop and go back up again. Now, what I'm going to do is let's go into the US dollar CAD. Actually, US dollar CAD, the last one I want to go double check on here. All right, so you can see here right here we hit US dollar CAD. That price has been hit. We didn't get in on the trade on this one right here, so I'm going to go ahead and mark this one off as hit. It was a maybe, so it is hit now. So we're only left with 1, 2, and 3 trades left. We are inactive on 3 trades, and so we'll go ahead and check that out. I'll go ahead and put the first entry point. What I normally do is I only put the first entry point in. Although we may get in on multiple entry points, I'll only put the first entry point in here, and I'll also put in the reason why we got in here. We got in over here because we had a oversold condition right here, and this one was an overbought condition for both of these right here. All right, so, and let me see why that is not, that should be, all right. Okay, fine. Yeah, that should be blue. All right, never mind. I'll fix it up later. All right, so here we go. So we're currently in on these positions right here. And so what I want to do is here, just quickly on just one currency pair. And I'm going to go ahead and show you right here. Let's go to CAD first. So what I'm going to do is I'm going to go actually to the daily time frame right here. So traders, when you look at this from a larger perspective, we're in contraction phase. This is contraction phase. Contraction phase is consolidation. We're certainly in consolidation. We haven't even moved into the explanatory phase, at least not on the daily time frame. Now, if we move down to a lower time frame, we may have it. In fact, this could be right here. This could be right here our expansion phase. Our contraction phase, and this could be the expansion phase, which means price is going to move down, then it's going to move back up again, and then trade back up and start trending. Now, the one thing that's important when we're heading out of these different phases is the midpoint right here. I'm going to go ahead and mark it off. The midpoint right here, which is about there, I'm going to go ahead and double check that and make sure that is true. Let's see here. We're about 140, so let's go 70 pips. Yep, we're pretty much there. So it's about there. All right, so this right here, I'm going to mark off, and I'm going to actually call this my let's call this contraction level. All right, so I'm marking it off right here and marking the price off here. I'm going to drop this down to about 12. All right, there it is. So the reason why I marked it off right here is because in the expansionary phase, I'm expecting price to do this. I'm expecting price to go ahead and work its way back down, come back up, actually trade above the contraction level, and then test it again and head up north. So, and the reason why I'm looking for this right here is because I'm currently right now using a counter trading strategy. But as soon as price comes back up here and I take my profit, I may want to move into a trending strategy because we're moving out of the contraction phase into expansionary phase or expansion phase, and then moving into our trending phase. And when we go through these different phases, we may want to go ahead and adjust the strategy that we're trading. So right now we're using the contraction or this contraction strategy in that phase. Then explanatory, we use also a contraction sort of strategy, which is a consolidation strategy. But once we move out of the explanatory and we move into trending, now we have to start adjusting how we're going to trade the market. So what we got to do, traders, is switch off any sort of trend, any sort of consolidation strategy, and start moving to more of a trend strategy. And then once the trend is over, we go back into contraction again. We go ahead and just change the strategy again. So there we are right here. And so important, and this is what we're going to address also in our sessions as well. We're also going to go ahead and address and exactly find out which phases we are in inside our trading strategy so that we know whether or not to switch on or switch off our current strategy that we're trading, because we have to adapt to the market conditions or else we're going to get eaten up alive. All right. Well, traders, that's it from me. Hopefully, everyone enjoyed that session once again. If you haven't subscribed to my channel, please go ahead and do so. Make sure that you go ahead and check the subscribe button. Also, like the video. Also, if you can, comment as well. And if you want to get notifications, make sure you go ahead and click on that bell button to get any notifications on videos that I post. But also, live sessions that I do as well. Hey, the traders, I'll see you back tomorrow for another cup of coffee. We'll go ahead and check out the markets then. It's FxBigDog, wishing you peace, joy, and successful trading. Till next time, happy trading.